If I handed you $1,000 right now and told you to go invest it, no stocks, no real estate, no savings accounts, just Bitcoin or Pokémon cards, which would you pick? Yeah, it sounds like a joke at first. One is a digital coin living on the internet, and the other is shiny cardboard that kids trade behind the school cafeteria. But here's the wild part. Both have turned regular people into millionaires. Today, we're going to break them down, side by side, score them in 6 key categories, and decide who actually wins this crazy investment face-off. Now, let's be clear from the start. This isn't financial advice. I'm not telling you where to put your money. What I am going to do is lay out the numbers, the story, and the big picture for both. The way we're going to do this is simple. There are 6 categories: historic return on investment, volatility, accessibility, knowledge barrier, future outlook, and cultural momentum. Each one gets a score out of 10. We'll tally them up at the end, and whoever has the higher total takes the win. And don't expect a boring lecture. Think of this as a friendly debate between a futuristic digital coin and a nostalgic piece of cardboard. Let's start with Bitcoin. Bitcoin was born out of chaos. The 2008 financial crisis wrecked trust in banks and traditional finance. And then, like something out of a hacker movie, someone calling themselves Satoshi Nakamoto released this thing called a white paper. The idea was radical: a currency that doesn't need a bank, a government, or even a physical form. Bitcoin lives on the blockchain. It's decentralized, and it's capped at 21 million coins total. That hard cap is a big part of what gives it value. There will never be more. Over time, Bitcoin went from a niche experiment talked about on internet forums to a trillion-dollar asset class. Companies added it to their balance sheets. Governments started paying attention. Hedge funds started buying in. And people who bought it when it was worth less than a cup of coffee, well, some of them are still smiling today. Now, let's talk Pokémon cards. In 1996, Pokémon launched in Japan as a trading card game for kids. Nobody back then was thinking investment. It was about battles, collecting, and bragging rights at recess. But over the years, Pokémon became a cultural giant. And those cards, they didn't just hold sentimental value. Some of them became rare. Very rare. First edition base set Charizard, sealed booster boxes, limited promo cards. These things have sold for tens or even hundreds of thousands of dollars. Some for millions. And unlike Bitcoin, you can hold these in your hand. You can frame them. You can smell the old cardboard if that's your thing. It's tangible. That matters for some people. Before we jump into the fight, let's break down how this works. We've got 6 rounds. Round 1 is historic ROI, how much money these things have actually made over time. Round 2 is volatility, basically how crazy the ride gets. Round 3 is accessibility, how easy it is to actually buy in. Round 4 is knowledge barrier, how much you need to know to not get burned. Round 5 is future outlook, how bright the road ahead looks. And round 6 is cultural momentum, how much hype, loyalty, and emotional power these things have behind them. Each gets a score from 1 to 10. Add them up and we get our winner. Let's start with the big one, historic ROI, return on investment. This is where we look at how each of these things have actually performed over time. Because here's the truth, hype and headlines don't mean much if your money isn't growing. So let's compare what happens if someone had actually put their cash into Bitcoin or Pokémon years ago and just held on. Bitcoin has one of the wildest return stories in modern finance. If you bought $1 worth of Bitcoin in 2010, you'd be sitting on more than $100 million today. No joke. From fractions of a penny to over $100,000 per coin in 2025. It's one of the most explosive asset growth curves ever recorded. Even more recently, Bitcoin's ROI continues to outpace most traditional assets. Over the last 5 years, it has returned well into triple digits. It's volatile, sure, but when you zoom out, the line goes up. This doesn't mean everyone becomes a millionaire overnight, but historically, Bitcoin has rewarded those who held on through the storms. Pokémon cards might not have gone viral overnight like Bitcoin, but their story is sneakier. A first edition base set Charizard that sold for $50 in the late 90s has sold for over $300,000 in recent years. Sealed booster boxes that used to sit on toy store shelves are now selling for the price of a Tesla. Over the past decade, high-grade vintage Pokémon cards have seen average annualized returns in the double digits. And during the big collectibles boom in 2020 and 2021, prices absolutely exploded. Some assets in this space outperformed the S&P 500. The difference is, Pokémon ROI isn't evenly distributed. If you bought random cards, you probably didn't get rich. But if you picked the right ones, you made a fortune. Each pack is like a lottery ticket, and to win, luck has to be on your side. If we're talking raw ROI and growth over time, Bitcoin's numbers are hard to beat. But Pokémon has had some heavyweight wins in the right corners of the market. Score: Bitcoin gets a 9 out of 10. Pokémon Cards get a 7 out of 10. Round 2. Volatility. This is the roller coaster category, because it's not just how much an investment grows, it's how it behaves along the way. Some people are totally fine with watching their portfolio swing like a wrecking ball. Others, not so much. Bitcoin is famous for giving its investors both heart attacks and victory laps. Pokémon, on the other hand, move slower, but they're not exactly stable either. Bitcoin has crashed more times than I can count. 2011, 2013, 2017, 2021. Each time, massive drops of 50 to 80%. That's not a dip. That's a cliff. But here's the thing. It's also recovered from every single one of those crashes so far. Big drawdowns, followed by even bigger rallies. It's like a roller coaster that goes off the rails, then somehow lands perfectly upright again. The volatility is part of why people make so much money on it, but it's also why some people can't sleep at night holding. Pokémon cards move differently. They don't have a public market with flashing tickers. Prices shift more slowly, often through auctions and private sales. That can mean less day-to-day drama, but it's not risk-free. When the hype wave hit its peak in 2021, prices for even mediocre cards skyrocketed. But when the hype cooled off in 2023 and 2024, a lot of those same cards dropped 30 to 50%. The rare stuff still held value better than the junk, but make no mistake, Pokémon isn't immune to bubbles. Bitcoin is like a sports car. Fast, exciting, but one wrong turn and you're upside down. Pokémon is more like a classic car. It's slower to move, but it still has its bumps. Score: Bitcoin gets a 4 out of 10. Pokémon gets a 6 out of 10. Round 3. Accessibility. How easy is it to actually get in the game? Because let's be real, an investment can have great returns, but if you need a secret password and a membership card to even buy it, that's a problem. This round looks at how easy it is to buy, sell, and trade each asset. Bitcoin wins this category almost by default. You can buy it in minutes. Open an app, deposit a few bucks, and you're officially a Bitcoin holder. You can buy a full coin or a fraction of one. No minimums. No velvet rope at the door. Selling is just as easy. Tap a few buttons and it's done. It's liquid, it's fast, and it's global. Yes, there are some learning curves, wallets, exchanges, security, but for the average person, this is as easy as opening a brokerage account. Pokémon cards? A little trickier. Sure, you can walk into a store and buy a booster pack for a few bucks, but that's not what we're talking about. We're talking about collectible grade investments. Buying those often means dealing with auctions, grading companies, authentication, and the dreaded shipping insurance. The real money isn't made at the toy store. It's made in high-end collectible markets. And that's not something everyone can access easily or confidently. So when it comes to ease of entry and liquidity, Bitcoin is basically a walk in the park compared to Pokémon. Score: Bitcoin gets a 9 out of 10. Pokémon cards get a 5 out of 10. Round 4. Knowledge barrier. How much do you need to know to not mess this up? Because it's one thing to buy something. It's another to buy it smart. This round is about how steep the learning curve is. Bitcoin's learning curve used to be brutal. In the early days, you needed to understand wallets, private keys, exchanges that looked like they were coded in a basement, and how not to get scammed. Today, It's way better. Apps like Coinbase and Cash App make it as easy as buying a stock. Still, if you want to really control your Bitcoin, like holding it in cold storage, you have to learn a bit more than just pressing buy. For the average person, though, this barrier is manageable. Pokémon collecting has its own language: print runs, misprints, PSA grades, population reports, counterfeits, condition sensitivity. It's not enough to know what a Pokémon looks like. You have to know if it's real, how rare it is, and what condition it's in. People lose money all the time buying fake cards, overpaying for junk, or misjudging condition. Getting good at this takes time, research, and usually some expensive mistakes. Bitcoin isn't totally idiot-proof, but it's pretty friendly compared to the collectible world. Score: Bitcoin gets a 7 out of 10. Pokémon cards get a 4 out of 10. Round 5. Future Outlook. We're looking ahead now. How bright is the road? Is this asset likely to grow, or has its moment passed? Nobody's got a crystal ball, but we can look at trends, demand, and what's happening in the real world. Bitcoin's future is tied to one word: adoption. More institutions are investing. ETFs have brought in billions. Countries are experimenting with legal frameworks. Big companies are building infrastructure around it. Bitcoin has become part of the financial conversation in a way few other assets ever have. It's not without risks: regulation, competition, volatility, but the demand story is real. As long as people see it as digital gold, its long-term future still looks strong. Pokémon is a cultural powerhouse. Nearly 30 years after launch, it's still one of the top-grossing entertainment franchises on Earth. New games, movies, and card sets keep bringing in new fans. And unlike a stock or a coin, this is nostalgia. Kids who played in the 90s are now adults with disposable income. That emotional attachment isn't going away anytime soon. The risk? Oversupply. Too many new cards can water down scarcity. But vintage and rare cards tend to hold value even when the newer stuff floods the market. Both have strong futures, but for different reasons. Bitcoin rides institutional demand. Pokémon rides culture and loyalty. Score: Bitcoin gets an 8 out of 10. Pokémon cards also get an 8 out of 10. Last round: cultural momentum. Some investments aren't just numbers, they're movements, communities, or entire vibes. This is the emotional horsepower behind the asset. Bitcoin has a massive global community. It's in headlines daily. It's got influencers, conferences, memes, billionaires tweeting about it, and entire countries experimenting with it. But it's also kind of serious. The culture is about finance, tech, freedom, and decentralization. It's passionate, but not playful. Pokémon, on the other hand, is everywhere. Kids, adults, celebrities, YouTubers, everyone knows Pikachu. Cards are auctioned for record prices. Streamers open packs in front of millions of viewers. Even people who don't care about investing have some emotional connection to Pokémon. This isn't just an asset. It's a piece of childhood. And nostalgia sells. Score: Bitcoin gets a 7 out of 10. Pokémon cards get a 9 out of 10. Let's tally it up. That gives us a total of 44 out of 60 for Bitcoin and 39 out of 60 for Pokémon cards. It's a close match, but Bitcoin takes the win this time around. Both of these assets have made people real money. Both have passionate communities, and both carry risk. Bitcoin is easier to get into, easier to sell, and historically has blown almost everything else out of the water in terms of returns. Pokémon cards can deliver monster profits too, but only if you pick the right cards and have the patience to hold them. It's not a set it and forget it kind of play. So what about you? If you had that $1,000 right now, are you clicking buy on Bitcoin or hunting down an ultra-rare foil? Drop your pick in the comments. Tell me why. And if you like this breakdown, hit subscribe, because next time, we're putting 2 more weird investments head to head. Trust me, it's going to be a fun one.